Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, my guest is Alain Forgot. Alain, he's the head of sales and business development at RBC in Florida, right? Florida?
Yeah, actually for the U.S.
For the U.S.?
So,
okay.
Yep.
All right. So, Alain, give us a little bit of an intro to yourself, who you are, what you do, how you got there, whatever you want to go into, and then we'll go into the big questions, because the hot topic is investing in the U.S. and the financing is always one of the top three questions every time. How am I going to finance these things? And we'll get into what you guys can do for us.
Sure. Good day, everyone. And thank you, Glenn, again for the opportunity. So just to talk briefly about me first, been with RBC for over now 43 years on both sides of the border. So I've been based now in Florida since 21 years and been working on different roles with RBC north and south of the border. And over about 16, 17 years ago, I was asked to develop a cross-border strategy to help Canadians with cross-border banking needs as well as U.S. financing needs. And that's where we started our cross-border initiative at the end of 2004 to help Canadians, to be resourceful for them and to provide not just the solutions they're expecting, but also the right advice about their cross-border lifestyle.
That's great. So one of the things I hear is that, does it count your Canadian properties in the U.S.? Because there's a certain number you're allowed to have, right? Am I right there?
Yes, that's correct. And then just to position again, RBC Bank.
Yeah.
We're a subsidiary of Royal Bank of Canada. Obviously, we're the same big brand family. However, we are a U.S. bank, and we are a direct or virtual bank. So everything we work from a banking standpoint, and even for the mortgage applications and all that, is done remotely. If you are in Vancouver, Toronto, or Halifax, you can work with RBC from anywhere. And it's good for the full US because our solution on the banking are digital and direct. So it works everywhere from Canada, everywhere in the US. And of course, we are a national residential lender just for Canadians. So basically, the RBC Bank purpose is to help Canadians to find their dream home in the US and get, of course, financing help and as well as cross-border banking solutions. So to answer the question, Glenn, on that is, we do have some ground rules which are kind of similar to the one that you may, of course, you experience in Canada, with the rule of four. The number of properties, mortgaged properties, is usually four. However, it's important to understand that it's also all properties, both sides in the US and Canada. And it all also depends of a couple of factors, such as your debt to income ratio, for example, or you may own multiple properties, but they're all not mortgaged. And then, again, your credit score and few other factors. So this is why usually the rule of thumb is, yes, it's four, including the property that the Canadian investor is looking to purchase.
Okay. And so that's in both countries, four in total.
Yeah.
Cool. And you mentioned credit score and some of those other things. So I'm guessing, because you're Royal Bank, you can qualify on the social insurance number rather than the American Social Security FICO, right?
That's correct, because we're only here in the US to help Canadians to get US financing. So we qualify Canadians from their Canadian credit history score, yep, income, assets, debt. So we technically qualify all the way. They don't need to have, an existing address or social security number in the US and all that, because we understand most of the Canadians buying are Canadian residents or Canadian citizens, and they don't have any true connection with the US. So that is part of RBC. And the thing is, for us, is we only working with Canadians. So we're used to explain to Canadians the differences between getting a mortgage in the US compared with Canada and things like that. So it's not just to provide a mortgage, but it's also the relevant advice that they need to have.
Okay. I've worked with some American banks, and I've noticed one of the big differences is that they actually charge the fees. Like you actually get the origination fees and the points on the mortgage, whereas in Canada it's usually covered by RBC paying the broker some other way. Um, is that the same? How does it go? Because you're kind of in the middle.
That's right. And this is the thing again to reinforce as more our cross-border mortgage professionals, since they only work with Canadians, and they always compare with what the Canadian investor or borrower is used to. So like the base is Canada.
Yeah.
So just as an example on that is in the US, it's a state by state regulation, and we're a national lender. So if you want to borrow to buy a property in California, Hawaii, Arizona, or Florida, it's for us, we can do it. However, some of those closing costs that you're referring are related with the state. I'll give you a quick example. For example, in Florida, where most of the Canadians are buying second home or investment properties, usually we say that it's about 2.5% to 3% of the amount of the loan in terms of closing costs. However, those closing costs, Glenn, are not just lender costs, but mainly they are third-party fees, taxes, such as state of Florida will charge a stamp tax, or like similar to your, in Ontario, the land tax or things like that.
Yep.
So in the US, as you know, we tend to put all those costs, third parties, lender, and all that together.
Yeah.
And they all paid at the closing, at the final step of the process. And they usually include obviously title insurance, also appraisal and things like that. From a lender cost per se on the fees like that, some of the lenders in the US will charge origination fee or what we call a foreign national fee, because the American lenders and banks, they usually don't work with Canadians, or if one of them is say that they can work with Canadians, they're going to charge what we call a foreign national fee, which could be 1 to 1.5% more than the rate for the domestic market. While at RBC Bank, we don't charge those premium of like origination fee. We don't charge that upfront like the 1%. Of course, there will be appraisal, there will be some underwriting fee and all that. And actually, we do have a special offer until the end of August. Somebody who's doing a full application will save on $825 US of what we call underwriting fee, which is actually waived. However, they will have to pay the other fees related with like appraisal and taxes from the state or the county. So this is important. Like just as an example, Arizona will be more on the 2%-ish, and California, which is higher, and state in terms of fees will probably be around 4%.
Okay.
So all of those fees are packaged at the closing table, including the title company or the escrow who will do the closing at the end of the day, for including their fees as well. So all of that is itemized through the process that the borrower knows exactly. Those fees are itemized to explain where they go, what they are for, and that's really kind of the ground rules.
Makes a lot of sense. Okay, cool. I know a lot of these Canadians, some people are going down there to buy rental properties, and some people are going down there to buy vacation homes. Is the program different? What is the lending, the criteria different, and is the rates and leverage different?
Sure, and that's an excellent point to cover. Actually, Glenn, the year before the pandemic, Canadians purchased $9.5 billion of US real estate, residential real estate. Half of that, 4.75, was purchased actually in Florida. And from that, I mean, this is all residential. So you may have like rental investment property, vacation home, second home / rental property. Here's the ground rule as far as RBC Bank is concerned. When we say vacation home, Glenn, here for us, it could be that you are as a owner, the owner of the property, using the property a part of the year when the border is open, when it's normal, obviously normal time.
Yeah.
And then you enjoy the property for a couple of weeks, once in a while, go back and forth. And then at some point in the winter, you need a break of a couple of weeks. If you're adding that time to 6 to 8 weeks throughout the year, however, when you're not there, if you want to rent your property, for us, that's what we consider as a second home. So you can get 80% loan to value or 20% down. So that property will be considered for us as a second home when the owner is using the property for him and his direct family for at least 6 to 8 weeks throughout the year, can rent the rest. Then the other program we have is for pure investment rental purposes of the property, which means you're in Toronto or anywhere in Canada, and you buy and you don't have time to come down, or you just want to rent all year long. That's the pure investment property. Then it will require 25% down.
Okay.
So the rest of course, the loan in the US with RBC Bank is US dollar. So that will, the only difference also between the two programs is the fact that the second one, the investment property, will have about 1% premium on the rate, in 1% increase of the rate, because it's for investment purposes. While the second home, a lot of Canadians, what they do is they're not necessarily retired. They just want to diversify their portfolio of real estate. They buy a second home, they come back and forth. And then, when they say, when we're not there, if we're allowed with the HOA to rent, we'll rent the property for, a month or 2 or 3 during the peak season. And usually, as you know, they can almost up in the Sunbelt states in the hot season, in the peak season, they can cover mostly all their costs if they rent for a few months, for the year.
Yeah, that's great. And then, so say you bought these places like a few years ago and it's appreciated a lot. Like Florida is very hot right now. What does it look like to do a refinance or a cash out refinance?
Yes, and actually, Len, that's something we've seen a lot last year during the pandemic, because let's go back 14, 15 months ago when the pandemic started, uncertainty, shut down the border. Canadians were all back in Canada, were there and say, oh my God, my property is there. But suddenly the Canadian dollar dropped down to 68, 70 cents. A lot of Canadians last year during the pandemic used what we call the opportunity to leverage and take some US home equity out and benefit from US dollar to Canadian dollar, very weak Canadian dollar with like 42% exchange, and or use the part of that money just to keep in US dollar for future days back in the US. However, what we have seen in the last 4 months with the vaccination and the hope of the reopening of the borders soon, is we've seen now Canadians coming back to more like the buying market, getting pre-approved and all that, getting ready to flock the market and buy US properties. But back to the US equity, you can do it 2 ways with us, Glenn. First is with the traditional mortgage cash out.
Yep.
By which, if it's a second home, you can get up to 80%.
So still 80 on the refi. That's great.
Still 80 on the refi, exactly. And or for an investment property by way of mortgage cash out, it will be up to 70, 75%, depending of the numbers. And then you bring that as a cash out, take the equity out and use that money to reinvest, bring back to Canada, whichever you want. And then the other option is with a traditional home equity line of credit, by which we can set also up to 80% for a second home, vacation home. And then you have this line of credit that is available. And then you use, like in Canada, a home line, like up and down, fluctuate the line of credit as you wish. And then you only have to pay interest monthly for 10 years on the balance that you use for that home equity line of credit. So for 10 years, you only pay monthly the interest. You fluctuate up and down, use what you want, what you need. If the Canadian dollar goes back, you want to repay it, you do. So you can keep that. And right now we do have actually a very good offer on the home equity line. Home equity lines of credit, basically in the US, Glenn, are the same, similar than the mortgage. It is subject to a 2 to 3% closing cost. And closing cost, again, including the stamp tax of the state or the title insurance and all that. So for us right now, RBC Bank will cover all the fees exception for like Florida with the stamp tax fee, which are $7 per 0.7% of the for the taxes. So for $100,000 will be $700. RBC Bank will not cover those external tax or state fees and tax, but will cover the appraisal, underwriting fee, everything, title, everything will be a package. And then, you know, this is a good opportunity because some of the states, like in Arizona, they don't have like the state stamp tax like Florida. So it will be basically free to set up a home equity line. And we always recommend to Canadians to have the availability of US dollar because you never know if the Canadian dollar goes back down to 70, 72 cents, at least they have access to their US home equity that they can use instead of exchanging all the time Canadian dollar to US and be subject to those fluctuations over time.
Cool. So for these home equity line of credits, is it still at 80% loan to value, or what's the leverage rate on those?
Yes, actually, yes, it is for a second home.
Okay.
Vacation home, second home.
Yep.
It will be up to 80% if they want, just maybe if there is no debt or they own it upright.
Yep.
You know, they can set up at 50, 60%, whichever, you know, but it can go up to 80% of the value, appraised value of the home.
Interesting. What's running through my head is I'm like, it might make, unless there's a difference in rates or something else, it might make more sense to almost just do a home equity line of credit. Because like for my business, I have money come in, money come out, and I could just pay off a ton and not pay interest, take it back out, put it into something else, put it back. And it could be a way to have some flexibility.
Exactly. It's the flexibility is the key thing. And right now, I mean, our rates in the US are slightly higher than they are in Canada because the prime rate currently is 3.25%.
Yeah.
So our mortgage, I mean, our HELOC, home equity line of credit, is priced at, you know, around actually the amount of the rate, of the short term, the prime rate. So it is a good rate at 3.25%. What can be actually a little bit lower depending on the credit score and a few other factors. But like you said, you have availability, and you can also put a home equity line of credit on the new home that you're buying. Yep. And if you use the money to buy, but then after that, like you said, you receive money from another source, you reduce, you fluctuate. So that's another point of, you know, to have access to US financing, which is very flexible.
Cool. Does the home equity line of credit count towards the 4 properties?
Yes. Yeah, actually, yeah.
Like maybe we've got a workaround here.
Again, that's a good point, but it is, yes.
Okay, that's great. And then to put one of these on, what's the timeline to put a loan on a property if you're going to purchase it? Like if I was going to put something under contract, how much timeline should I give RBC to put this loan on, or to do a HELOC? Or
yeah, that's a good point, Glenn, because in the US it's a little different, as you know, the process and the timeline. What is usually done in Canada within 7 days, 10 days max, it's about 30 to 45 days in the US. And here's the 101 ground rules for our listeners. For a mortgage application, you can do a mortgage application only when you have an approved purchase contract. What you can do prior, and we'll talk about in a moment, is a pre-approval. Okay, you are looking to buy a property in the US. You know, in the next few months, as soon as the border reopen, you're gonna come down here and you want to buy. So you want to be ready to kind of be also competitive in this market right now, because like you in Canada, the US real estate market, especially in Sun Belt states, is a very competitive market with multiple offer, low inventory, same trends and features that you're experiencing in Canada.
Yeah.
So what we recommend is to get a pre-approval letter, which is good for 120 days, and which also can be done online. Only 5-6 questions, truly, with the link I can share with you. And then you apply, you get the letter, you set your budget, so you know more or less how much US dollar RBC Bank is looking to finance. Yep. You look at the market, you find something, and actually many clients who were in the market in the last few months has actually attached their pre-approval letter to their offer when they were dealing for that, because they wanted to be competitive against the other, buyers on that property. So that's really what we've seen. And then this letter is good, like I said, 120 days, and we can update it after that time if the property is not. But as soon as the buyer finalized the approved contract purchase, then that's when the full application process started. And then when it starts like that full application, and of course the documentation supporting that usually that's the time up to 30 to 45 days up to the closing.
Gotcha. Cool. I think this is my last question, at least the last one I had as my point form notes. Your loans, the term and amortization, how I know it's going to be a lot different than Canada.
Yes and no, actually.
Yes and no? Okay, cool.
Yeah, I mean, let's start with the amortization. In the US, all our loans, we are RBC Bank USA, like I said, as a residential national lender just for Canadians, we are portfolio lender. So we keep our loans, we approve our loans, and we keep them in our portfolio. So amortization is 30 years.
Yep.
And the term we offer are 3, 5, 7, and 10 years. Rates currently with the second home, like a vacation/second home
Yep.
purchase, will be currently, as an indication right now, as of course, June 16th, it will be like 2 3/4 to 3 3/4, more or less. For like a 3-year, 2 3/4, 10 years will be 3 3/4.
Yep.
And then the same thing for an investment property, just for rental purposes, will be 1% more. So from 3 3/4 to 4 3/4 for 10 years. But the main important thing, Glenn, to remember is the loan in the US, the mortgages are all opened mortgage.
Okay.
So let's say that for a second home right now, you buy a property and then you get let's say a 5-year term. Let's say as an example, 3 1/4, just for the purpose. Let's say through 2-3 years, Canadian dollar bounce back, hit close to par. You want to repay your mortgage prior to the end of the term, no prepayment penalty at all. Okay. So that's another point, because you were talking about flexibility earlier in the
Yep.
podcast, and that's important to understand that in the US, those loans are opened. So if you want to secure yourself peace of mind that those low interest rates will not last forever, and you want to go up to, let's say, a 10-year term at 3 3/4, so you know what to expect to repay monthly.
Yep.
The Canadian dollar will fluctuate during that time, but the worst case, I mean, you will renew at the rate at that time in 10 years without any closing costs for another term at the rate at that time. So technically, but the good side of it, if during that 10-year term you decide to sell a property or just to Canadian dollar goes up in value with the US, then you want to repay the mortgage in full or in lump sum, you can do it at any time. So that's a feature and flexibility, which is a very good benefit for US financing.
And you talked a bit about renewals there. You're not going to have to pay those state fees or anything like that. You basically just sign a piece of paper and just continue for another, say you did a 5-year term, another 5-year term, or is there more fees and stuff to redo because you're starting another mortgage, basically?
Okay, yeah, Glenn, and that's actually a good point too, because with RBC Bank, a lot of lenders in the US will, at the end of the term, will move you to what we call adjustable rate mortgage. At the end of the term, they will fluctuate on the LIBOR, blah, blah, but you never know what the rate could be. With RBC Bank, what we do is similar to Canada. At the end of the term, we will renew for whichever term at that time you decide to, without any closing costs or third-party fees or costs. So it's a very smooth or seamless process to renew for another term of your choice. And one thing too, and in the US, we don't have what technically you guys call stress tests.
Yeah. Okay. Yeah.
We don't do that in the US.
Okay, so now I'm sure you've sold some people. How do they do this? Do they go to rbcbank.com and look for a mortgage broker? How do they find this broker or mortgage person to do these loans for them?
Okay, we have a dedicated cross-border mortgage advisor team. And as I said, we don't have in the US brick and mortar. So if you are, in Ontario and BC or in the Atlantic province and you want to apply for pre-approval or loan, our team is centralized at our home office in Raleigh, North Carolina.
Okay.
And they can apply online or over the phone. We make it very easy, especially, Glenn, as you know, with the border still shut down. We also can facilitate not just the intake or the application, but also the closing, because obviously nobody currently wants really to travel across the border and be subject to that quarantine. So what we do is, and we do have a lot of Canadians actually active and buying in the market right now. So we do what we call technically the mail-away closing or the remote closing. So if you are in Calgary, Vancouver, Toronto, Ottawa, Montreal, we arrange that as long as we have a legal notary, witness to those documents, everything can be arranged remotely. So for the application now, for a mortgage purchase or refinancing, you can visit directly our RBC Bank website, what we call our Mortgage Advice Center, and you can start the process through the online application. For the pre-approval, same thing too. You're going to see a link, get pre-approval letter, which process, like I think I mentioned, takes 2 to 3 days. So you just provide some basic information for the pre-approval. One of our mortgage advisor will get back to the client within usually a day or two, review the information, pull the credit history, package that, look at it, and confirm with a letter, usually 3 days, 2 to 3 days later. So that is a very quick process. So this is for people who are looking to buy, who are not under contract, as I said. But for a full application, if they have a signed approved contract or a refi, they can also start the full application process online at rbcbank.com/US Homes, HOMES. US Homes, and this is our or the generic website is rbcbank.com as a full cross-border bank and a national lender. But for that specific request, and one thing, Glenn, I would like to add is people who are looking to buy or invest in the US real estate market right now, there's a lot of opportunities. I mean, as you know, that's the name of your show and all that, Canadian, investing in the US and the USA, exactly. And this is why, we know what's going on in Canada right now. I will say that, yes, it's similar here because low inventory again, and a lot of buyers. And of course, the sellers are on the driver's seat right now. However, like Florida, I mean, beside the weather, beside, of course, the lifestyle and everything that you know already, there's a lot of opportunities at different price point. And RBC Bank, we can finance for a second home up to $2 million or even more with an exception basis. And we're here to help you to make that dream, come true. But it is really something that I will say that it is affordable. Our real estate market, even if it went up, about 16% nationally in year over year as of April, it is still affordable because, of course, if you want a condo on the 20th floor right on the beach in Miami or Fort Lauderdale, you're going to have to pay the premium. But inland, I mean, there's a lot of 3, 4, 5 bedroom homes and beautiful communities all over Florida. For example, Orlando market as a short-term rental zoning, a lot of buying opportunities. The key major builders like Mattamy, Minto from Canada, and then like Lennar, the biggest builder in the US, they're building like as much as they can because the demand is there. Yep. The land is cheaper in Orlando too. And there's a lot of Canadians right now looking at that market because a lot of that market is also on a short-term rental zoning. And those creates opportunities. But again, can look at buying properties in Arizona or elsewhere. In the top 3 states are Florida, Arizona, and Southern California, and California as a whole.
Cool. These loans are all in your personal name, and you're personally qualifying and personally guaranteeing them. if you were looking for the security of a corporation and you quit claim the property afterwards, would that trigger the due on sale clause?
Yeah, that's a little fine line, Glenn. You know, you're an expert in the field as well. So those are issues that may have to be addressed.
Talk to your broker, I guess. Yeah.
Type in, and here's the thing: RBC Bank, because we only work with Canadians in the U.S., Glenn, we understand that for different families or investors, situations are different. So it might be more specific for a couple buying a second home to buy it under their both names and together, of course, at their personal name. For another family, it might be better because they have multiple kids and all that, and they are elderly and they want maybe a cross-border trust, revocable trust. Could be some cases, like you said, holding company or corporations, Canadian corporations. What we don't do at all is an LLC, a U.S. corporation. We unfortunately cannot.
I always shy everyone away from that.
It is, exactly. You don't want anybody with double taxations and issues like, they don't know or familiar with. But Canadian, we can consider other ownership properties, structures, like Oldco, and that, as long as they are single purpose of holding that specific U.S. real estate asset, they could be done on an exception basis and they can be looked at. However, Glenn, you know that because you're familiar with investing in the U.S., but I was always say you must seek professional cross-border legal and tax advice from experts, because it's a lot of different rules, regs, laws. You don't want to be caught up when you selling and be caught up with like double taxation on your capital gain or your income because you're renting. I will always say from the get-go, get your that straight on the legal tax estate. Get the most tax efficient ownership structure for that asset. And again, your family situation is always different than your neighbor or the other investor. So the good thing with RBC Bank, Glenn, is we have put together like a one-stop shop of resources.
Yeah.
For example, over the last few years, we have developed relationships with a number of cross-border legal and tax experts. And their contact information and all that is available in our website. Again, rbcbank.com. We can use that one for /HPA for Home Plus Advantage. And those resources, one is in Toronto, one is in Montreal, one is in Vancouver. They are specialized with cross-border legal tax issues for Canadians, wealthy Canadians. And they can provide some guidance and advice from the get-go. And they have been working with us for a long time. They're well known in the field. And because of RBC relationship with them, usually they provide the first consultation on a courtesy basis. Another example of resources, we have developed 2 years ago an e-guide. An e-guide, which is, if you can find on the website as well, is about 35 pages of what to consider when you purchase in the U.S., not just from a financing or banking, but in currency exchange, but about the legal tax, about if you're renting, what to consider. So it's a very holistic, short read about the key issues when Canadians are buying U.S. real estate. Because one thing we find out, because you've been an experienced investor in the U.S., but a lot of Canadians, they don't think about those differences, and they don't think that U.S. is another country with different laws, rules, regs, and terminology and business practices. So we try to provide this relevant advice to them from the get-go. So it's make it more educated, and they can better understand, all the issues that they have to cope with or deal with.
Cool. This might be the same answer as my last question, because these are things just popping in my head as we go. Say sometimes like for us doing a renovation, I like to put it in a corporation just for personal asset protection. When I was done the renovation, I could then move the property to my personal name, put a mortgage on at RBC. That would work. Would there be a second seasoning period? Actually, you guys don't have a seasoning period, do you, at RBC?
No, not really. But the thing is, exactly. I mean, when it's paid back to your personal name, and then you can start like the refinancing process. and then take out your money, from this investment. And again, if your property is held upright, and then you want to do those improvements, you can set, as I said, the home equity line of credit on that property if you don't have any mortgage on it, and then you cover your costs through your home line as you go. So those are exactly, I would say, creative way to avoid to exchange Canadian dollar to US dollar all the time. And you know that well. And of course, now we are having the best exchange rate between Canadian dollar to US with the strength of the Canadian dollar in the last several months. Around 82 cents. So 22, 23, 24% exchange is one of the best in the last 4 years. It's good, but we know one thing, it won't last. And our economists are actually forecasting that next year it might go down a little bit more around the 75, 76 cents, or the 32, 33% exchange. So when you have a US home equity or US asset and you have a US home equity line or a mortgage, at least you kind of balance mitigate the impact of the vulnerability of the currency exchange in the future, because you have access to those US dollars from your equity. And then again, over the last few years, and I will say several years, we know last time Canadian dollar went up to par with the US, like 6 years ago. A lot of Canadians purchase cash properties in the US. And right now it's about $90 billion of US real estate owned by Canadians upright or debt-free. So it's a lot of US equity sleeping in the US here, not benefiting really Canadians because they think, oh, maybe I cannot get a US home equity line, or because I cannot get a US refinancing mortgage because I'm Canadian. But this is why we're here, is to make those things happen. And that's why I value the opportunity to be with you today, because we need to educate Canadians about those resources and solutions that they have in the US, especially when they're contemplating or they own a US property.
Yes. And this was great. I think you provided so much information. I think there's a lot of people that are going to go, there's a lot of questions that they had in their head. Even myself, I had a lot of questions. And I've been wanting to start working with the Canadian banks. So it was great to get a lot of that stuff out of the way, because I've been working with the American banks and it's at a higher interest rate, but it's a little, anyway, I've been excited to move into the better interest rates of the Canadian banks. So that was great. And I think a lot of people are going to see a lot of value in that. I really appreciate your time, Alain.
Glenn, it was my pleasure. I'm glad there was valuable information. And if someone has a question, whatever, we have the Mortgage Advice Center that you can speak with one of mortgage professional at 1-866-283-5928. Again, 1-866-283-5928 if they have more specific question on their situation. And we also do a lot of advice events on a regular basis and things, because we feel it's important for us to educate the Canadians about the options and opportunities that they have. And you understand that, but not everybody has the opportunity, to be familiar with those issues, but they have the dream. So we're here to make that dream happen for them. Thanks again.
Thank you. I really appreciate it.
My pleasure.